Welcome to the Travelex Weekly Outlook. It's the week of September 20th, and the dollar started the week off on mixed footing. Right now, the dollar is holding near its lowest level in over a month against the euro and a basket of major currencies. Investors at this point are really bracing for Tuesday's Fed meeting. We have seen the dollar come under pressure. In fact, it's been in a broad decline over the past few weeks, and that's on expectations that perhaps the Fed will have to do more to support the recovery and help keep it from stalling. That's because some of these quantitative easing measures that the Fed has talked about, some of those measures, although supportive for the economy, they tend to put downward pressure on a currency. And that's because anytime the Fed pumps in trillions of dollars into the economy, that can bring down lower borrowing costs, and that does put downward pressure on dollar-denominated assets. In the Fed's case, that could come to the tune of trillions of dollars and more support for the economy. That will help ultimately get it on a more sustainable path. But the previous week, we did see the dollar come off more of a mixed footing. We did see the dollar fall to its lowest level in 5 weeks against the euro. The dollar also fell to a 2-year low against the higher-yielding Aussie dollar. And that was coming on, that was as investors basically braced for this week's Fed meeting. The U.S. Central Bank is widely expected to keep U.S. borrowing costs unchanged, but what's going to be the main focus of the market, investors will really hone in on the central bank's accompanying statement. But the last week, getting back to that again, we did have some good news. The good news was that U.S. retail sales, those posted the sharpest gain in 5 months in August. That did help to allay concerns about a possible double-dip recession in the U.S. But the bad news came from the manufacturing sector. There were some reports from New York and also from the Mid-Atlantic region that really suggested that manufacturing activity has been faltering. There was also another report that showed that consumer confidence had unexpectedly tumbled actually to its lowest level in more than a year in September. So on balance, last week's batch of economic data basically kept the risk alive that perhaps the Fed will have to do more to bolster the U.S. economy. As I already hinted at, the week's main event for the week of September 20th will be the Fed meeting on Tuesday. Again, the U.S. Central Bank is not expected to touch interest rates. They will likely keep rates on basically near record lows well into next year to help assist the recovery. But all eyes will be on the Fed's accompanying statement. Now, if the Fed does pave the way for additional monetary easing in the months ahead, that would tend to be dollar negative. But we could see the dollar poised for some gains if the Fed signals that the U.S. Central Bank is not likely to provide any type of monetary easing policies in the months ahead. Keep in mind the Fed they do have 2 more meetings throughout the balance of the year. There's going to be one in early November and then another one in mid-December. In terms of U.S. data, there's some data due out from the housing market. We'll also get the latest on weekly jobless claims, leading indicators, and then lastly we'll get a report on durable goods orders. Those reports should really speak volumes on the pace of the recovery. That should do it for this week. For the latest on the currency markets, be sure and check us out online.